Okay, guys, today we have to start our new course, and that is related to the ACCA. Paper is FA1 regarding financial transaction. Okay, so let's start from here. We have the chapter in this subject, the chapter we will cover in this uh, course, that will be the business transaction. Then we will have types of business documentation, double entry bookkeeping, banking, payment and receipt, sale and business record, recording sale, purchase and purchase record, recording purchases, recording receipt and payment, maintaining petty cash record, payroll, a bank reconciliation and control account and the trial balance. So we have 14 chapters and we will cover all these chapters in this course. Clear? So let's start from the very beginning, and this is the chapter number 1. And the chapter number 1, as I told you, that is business transaction. The content of this chapter will be types of business transaction, cash and credit transaction, terminology, petty cash, payroll, keeping a record, and keep personal and control over transaction. And the last one content is timing of transaction. Clear? Okay. Now let's start from the types of business transaction. Okay, so you must understand that wait a minute here. We have to discuss about the type of transaction now first. Okay, so as we know that company have every business is sell goods and services to customer and get paid for what it sell. It means that selling product and services. The first thing is selling product and services. What does it mean? It means that businesses make money by selling goods or services to customer. This could be anything from retail item like clothing or electronic to services like haircuts and consulting. Clear? The second thing is every business is buy goods and services. The first one was about selling. The second one is about purchasing. So purchase, supply, and pay for work. So this is about purchasing. Purchasing from suppliers. It means that to operate business, businesses need to buy goods and services from suppliers. And this include anything like inventory for retail stores, parts of repairs, or office supplies like stationery and computer. Clear? Another thing which is come under the business transaction that okay, first you see here, this is the example which I told you that retail businesses such as department store and supermarket have to buy goods for resale to shoppers, and garage has to buy car parts, components to do repair or on the customer, and business buy stationery and computer for their office work. So these are the example. Now, so many business have employees and have to pay their labor. So it means that the third thing is employee cost. So many businesses hire employee to help with operation. So they have to pay these employees for the work, which is a significant expenses for the business. The fourth part is all businesses incur expenses for various services such as supply of electricity, telephone services, property rental costs, and local taxation. So this is your operating cost. You can say also operating expenses, which means that businesses also have various other expenses necessary for operation, and this include things like utility bill, electricity, water, communication services like telephone and internet, rent for property, and local taxes such as business rates. So these are the type of transaction. Now let's move on. You see here we will discuss about cash transaction and credit transaction. Cash transaction and credit transaction. Cash transaction, let me write here. And cash transaction, the buyer pay for the goods or services either upon the exchange or in advance. So for example, customer paying at a shop cash desk or supermarket checkout point represent cash transaction. While on the other hand, we have the credit transaction. And credit transaction is different that of the cash transaction. In credit transaction, the buyer doesn't have to pay immediately, but it is given a period, a credit period, to make the payment after receiving the goods or services. So this allow for a delay in the payment, often with the terms agreed upon, with the suppliers, with the customer. So you have two type of transaction, any business transaction buying goods services, either on cash transaction or credit transaction. So with cash transaction, we means that the buyer pay for the item either upon the exchange of the goods or services or pay in advance. For example, sell in a shop or supermarket, or cash transaction because the customer pay at the cash desk or the cash out point. Mean here we are paying immediately or in advance in cash. While in case of credit transaction, we are not paying at the time we are purchasing, but we are paying some after some time, because we are the customer and the supplier agree on some credit period, and after credit period they pay the amount. So this is the credit period for you. Okay, now let's move on. We have here and this is just a example, and we have already discussed that cash credit and when goods or services are provided and the customer pay immediately, then we call that as a cash sale. Clear? And when goods or services are purchased and paid for immediately, then we call that cash purchase. Here, let me write. One is cash sale and another one is cash purchase. And these two, you have when you're purchasing or selling the goods, you are immediately pay or receive the amount. Clear? While in other hand, you have a credit transaction, and credit transaction you are not supposed to pay immediately. So when you do sale on credit, it means that the goods or services are provided and the customer pay later. While in case of purchase, when you're purchasing something on credit, it means that you are paying, you will paying to the supplier later. Okay, so now we have to just check out this example. Velocity, if you see, Velocity book publisher places an order with a printing company, and the company is Qprint, to print 5,000 copies of a new book they are publishing. Now Qprint agreed to print the books, and the Velocity book publisher will be given 60 days to pay after. So this is the credit period. It means it's a credit sale after books have been printed. So Qprint delivers the book into the warehouse of Velocity Publishing book publishers on 1st March and submit a demand for the payment known as invoice of 15,000 payable on or before 1st May. So this is a credit transaction because Velocity book publisher doesn't have to pay for the purchase item when in order the book, so not even when the book are received. Instead, it has been given time to pay later after the goods have been received. So the supplier has given credit period to the customer. So this will be considered the credit transaction. Clear? Most transactions between the businesses are credit transactions. So mostly the people dealing with in credit base in other words, businesses usually buy from other businesses and sell to other businesses on credits. The credit transfer. This is just about the credit transaction that mostly businesses are dealing in credit base. Okay. Now you have sale and purchase, cash sale and credit sale. When you are doing sale and cash, then the goods and services are provided and customer pay immediately, which what I have told you before. And in case of credit sale, then customer pay later. While in case of purchasing, then you pay immediately if you are purchasing something on cash, and you pay later if you are purchasing something on credit. Clear? Okay, fine. Let's move on. Okay, now we have an activity, and that is here. Abdul is given a haircut by Michael, who is a self-employed hairdresser, and Abdul pay with a $10 note. Okay, so what kind of transaction is this? The first one is it's a service transaction. We are selling. Who is selling? The Michael is just selling the service to the customer Abdul. So what kind of transaction is this? Purchase sale of good by the Michael. No, this is wrong. Fine. Sale of service by Abdul. No, he's just receiving. Purchase of good by Michael. No, this is also wrong. This is not good. So goods is automatically out because this is service. Now it's talking about the sale of service by Abdul. Abdul is receiving, so he is not selling. And who is selling? The Michael is selling the services. And purchase is purchase of services by Abdul. So who is purchasing the services? Abdul is purchasing the service, and the service is here cut. Okay. Now the second one, what kind of transaction is this from Michael point of view? Michael point of view, what kind of transaction is this? So, Abdul has paid immediately by cash for the service sold by the Michael, and that is $10 note. So the option will be A, because this is a cash sale from the point of view of the Michael, and Michael is actually a self-employed hairdresser. Clear? Now let's move on. We have some terminology, and we have to discuss this terminology because this is very important. If you understand the terminology, then it will be very easy for you when you are dealing with any sort of MCQs. Okay, the first one is sale. What does sales means? The exchange of goods or services for money. Terms such as commission and fees are also used instead of sale in some other services. So the definition of sale is actually the exchange of goods or services for money. Exchange of goods or services for money, then we call that as sale. Clear? For example, a bakery selling some bread to the customer, so that is called selling. And are you selling some let's say the tuition provider selling the course, so that is the service you are that is the service that the trader are selling. Clear? Purchase, on the other hand, you have purchase means that buying goods for resale or consumptions, means buy good for resale consumptions. For example, a retail store purchasing clothing from a wholesaler to sell in their shop. Then we have a receipt, receiving money received upon but not exclusively from cash sale. Receipt means that money received upon from cash sale but not exclusively. For example, a coffee shop receiving cash payment from customer for their morning coffee. Clear? Now the payment, what about the payment? What does it mean? So it means that money paid out in cash, by check, or other form of a bank payment. For example, a restaurant paying its supplier for ingredient used in preparing meals. Clear? Then the another term we have is that is income. Income, this is a more general term that than a sale, including as interest received. So this is a bit broad term as compared to the sale. By definition, we will say that income is a broad term including sale revenue, interest received, rent from letting business premises, etc. For example, interest on a saving account held by a business, so that will be your income. Clear? And then you have expenses, so indicate money spent for rent, electricity, for lighting, telephone accounts, and so on. This doesn't include purchase of good for resale. Okay, it means that money spent on operational costs like rent, utility, telephone bills, etc., excluding purchase of good for resale. For example, paying the electricity bill for lighting a retail store, so that will be your expenses. And at the last, we have expenditure. Expenditure includes purchase expenses or money spent on buying anything else for the organization. Okay, so expenditure include purchases, expenses, in money spent on buying anything else for the organization. For example, buying a new office furniture for the business premises, so that will be considered as your purchase. Now let's move on. We have some MCQs. We'll discuss one by one. The first MCQs is, what is defined as the exchange of goods or services for money? And we have already discussed the definition of sales, that sale refer to the exchange of goods or services for money as stated in the definition we have discussed. So the option C will be the correct one. Let's move on. Second, which encompasses money received often from cash sale but not exclusively. So that will be your receipt involve money received often from cash sale but not limited to them, as for the definition. Okay, and we have already discussed by definition we said that money received often from a cash sale but not exclusively. And I have given the example that let's say you went to the coffee shop and receiving a coffee shop is receiving cash payment from the customers. Let's say you are the customer for the morning coffee. Okay, so the option B will be the correct one. Let's move on. 3. This one is about what does income include besides sale revenue? This is very important in MCQs. So purchase expenses, interest received, and that will be the interest received. Income is a broad term, as I told you, and including sale revenue, interest received, rent from letting business premises, etc. Then you have MCQs number 4. Which term indicate money spent on operational costs excluding purchase of goods or services for resale, and that will be your expenses. This option A. Reason indicate money spent on operational costs like rent, utility bill. This was also discussed in the definition. Okay, fifth number, MCQs number 5. What encompasses purchase expenses, money spent on buying anything else for the organization? That will be your expenditure. Expenditure include purchase expense, money spent on buying anything else for the organization. Okay, then you have MCQs number 6. What is defined as buying good for resale or consumption? And that will be your purchase. Purchase involves buying good for resale or consumption. Then let's move on. We have MCQ number 6. We have already discussed these things, so I don't want to waste my time and your time, but you have to read this by yourself. And if you know, you understand the lecture properly, then definitely you will do all these MCQs by yourself. Which term represent money paid out in cash by check or other form of bank payment? And we have discussed that will be of payment. Payment encompasses money paid out in cash by check or other means. If you pay on cash, then it will be cash transaction. If you paid with some credit term, then that will be your credit transaction. MCQ number 8. In this MCQs, we'll discuss, we will know that what encompasses money spent on operational costs like rent and utility. I think that will be your expenditure. Expenditure include money spent on operational costs like rent, utility, and other things. Okay. Now MCQs number 9, and this one is which term include broad range of sources including sale and trust, and that is also discussed earlier that that will be your income. Sale is a bit narrow, but income is a bit broad. So income include broad range of sources including sale and trust, receive, rent. So that will be your answer, and this is option C. And at the last, that is what term refer to the exchange of goods or service for money often using a term like commission and fee for some services, and that will be your sale. Sale involves the exchange of goods or services for money often using the term like commission, fees. So this is the end of this lecture. Today is our first lecture. Inshallah, in the next in the upcoming lecture we'll discuss the remaining chapter. Thank you for watching.